The broadcast is now starting. All attendees are in listen-only mode.
Good evening, everybody. Can everybody see my screen and hear me? Great. Perfect. Let's go ahead and get started. What I wanted to do today, I still want to do a separate webinar that we can make that we can kind of slice it up and use that as one of the, put it on the help, under the help tabs. On specifically on fans, but we'll kind of maybe touch on that just a little bit more on how we use those and how they can be helpful as far as where we are in the larger grand scheme of things for the market as a whole. But what I wanted to focus on a little bit at the beginning today, in addition to there was a great question from Harry on ABCs versus WXYs and the differences, some nuanced differences there, is kind of talk a little bit more about how Garrett and I are seeing the S&P 500 and some of the other index charts versus Avi's potentially more bullish interpretation, and where we need to be on the lookout for things to falter. And we're all bullish, and so and currently bullish from here. And so what kinds of things we need to see, where we need to see price accelerate versus where it can run into resistance going forward. And I think we're going to still be in the heart of a larger third wave, even if we need some additional consolidation. So those would really just be, it wouldn't necessarily be an opportunity to turn bearish. It would just be an opportunity to pay attention to where those shifts might be if we are going to start to run into some resistance. So looking at the S&P 500, the major difference is that Garrett and I are counting a smaller wave 1 as 5 waves up complete, a smaller parentheses wave 1 in the larger primary wave 5 that started back here in March 2020. So a smaller 5 waves up for wave 1, a very shallow wave 2, and then a larger 1, 2, and then the subwaves going, getting a little bit more murky from there, and that's where some of the nuance comes in. Whereas Avi's counting this entire move up into September as the larger parentheses wave 1, and then this consolidation here as the running flat for the wave 2, and then projecting fibs off of there. So what we're going to do is we're going to add the fibs for Avi's count as an extra fib thing here. We'll go ahead and we'll make that make it pale blue there. Okay, so these fibs, the local fib tool that I use, these labels are attached. See how it's attached to the parentheses wave 3? So that's my fib extension measured off of the low here for wave 2, which is actually a higher low that I'm counting. And I'm counting that because that's the way the RSP counts best in a lot of individual names. So those are the fib projections for this wave 3 off of there. Whereas these blue fibs are the fib extension for the counting this as the parentheses wave 1, this is the parentheses wave 2, and these would be the fib extensions for wave 3. So you see the 1382. So the 5626 is the 1618 extension of the fibs in the way that Garrett and I are counting it. And 6400 is the 1382 extension in Avi's fibs. So, I mean, that's a pretty big, almost 100, well, not quite 100 points, about 600 points difference there. But still, both of those substantially higher than where we are now for the longer term move. Now, the question is that if this is Avi's wave 2, then you have another wave 1 and wave 2, and then we've started the third of that third and should at least be targeting the 5300 region as the 3 of 3, whereas Garrett and I have 2 potential counts here for our 3 of 3, a little bit lower than that. Either The current move right now extending up towards the 4,700 region for the 3 of 3, or getting a wider, another 4 5 to extend that up to the 123.6 extension of parentheses wave 3, which is our other ideal fib target for the minor degree wave 3 here, and that's at 4850. So with that, there's not as much difference there in terms of the degree that we're in. So we're looking for more extension inside the 3 of the wave 3. And I can't help that Avi's charts don't conform to the standard nomenclature in terms of consistency, in terms of the degree labeling. But the same 3 of 3 in Avi's count, and we can go ahead and make that blue. So we'll add one here, add a 3, and that would be targeting up here is more of a direct shot up towards the 5,300 region. So inside that, we have a 1-2 off of the more recent March low in all of the counts. But in what Garrett and I are looking at, the 1-2 off of the more recent March low is inside a 5th of this wave 3, or maybe a 5th of this 3, and then we get another 4-5 to stretch that up to the 4850 region. Whereas Avi is counting this as the 1-2 inside this wave 3, and this entire move is going to need to stretch, from the 4100s region where we are now, trying to cross up closer to 4,200, but off of this recent support, he really needs to see this accelerate well past the 4,400s on its way up towards the 4,700 region, and then get a 4th and a 5th wave up towards that 5,300. So what we're watching here is we're looking at either this filling out more as a 5th wave, running into some resistance in the 4,400 to 4,700 region, and possibly getting knocked back down for a 4th wave or for a 4th from here, and then heading up, or being able to plow through that resistance and accelerate in that more bullish heart of the 3rd kind of count. So that's what we're going to zoom in and talk a little bit more about. But before we do that, I wanted to bring in the fan lines from here and just see what this might help us with in terms of establishing a possible trend channels at this smaller degree. And then we can talk a little bit about the fans. So right now, let me add the labels here for the fans. All right, so right now we have this fan line right here, which is the 70.2, which is a bisect in between the 618 and the 764. So the 764 and 786 are these double lines right here. And as the further out you go in time, the much more spacing that you get between the standard fibs. So that's why in my fan set, I added, I added some half steps in between some of those normal fibs, because this, you see the 618, we're already well outside of that. So we've kind of lost that channel. I doubt we're going to reclaim this fib, but we have plenty of room before we come all the way down here to the 764. So we need something that gives us kind of a half step in between that can be kind of a guideline as possible momentum support. And that's that 70.2 level that we're kind of following along. So that was support here. It was support again here. So I think any consolidation, if we're going to continue to head higher, that's going to be a line that we're going to want to see us bump across to kind of head there. You can see these are older fib lines that are from much larger degrees fib fan lines. And we're still nicely, we held those double fans. This is the 764 and the 786. And so we're coming back up to test the same fan that this is in pink is this blue and the green one right here that looks like is going to be resistance for any of these wave threes, however we continue to bounce along and get up there. Okay, so now let's zoom in a little bit on this structure before we go to some of the other indexes, and let's look at what we have off of the more recent March lows. I'm going to try and drag, there we go. There's Avi's 3 of parentheses wave 3 up there, so he would be counting this as the wave 2. So instead of this being a fourth, a third, and a fourth, and then looking at 1, 2, and being in the heart of our third of the fifth wave here, for this wave 3 in the 46, 4700 region, we really should accelerate strongly past the 4400s and head up closer to 47 sooner than getting more of a consolidation here and then heading up here and then treating this, if this acts like a fifth wave, then we really need to be a little bit more careful into the high here. And particularly, if the structure here doesn't accelerate and this acts more like a fifth wave, then again, this is possibly the green wave 3 of the 3 topping, which allows this minor wave 3 to push up closer to that 4850 region, which is the 123.6% extension of the parentheses intermediate degree wave 3, but would allow for more consolidation in the short term into maybe a sell in May scenario, and then fading down into June, and then another rally up towards that 4850. So that's what we're on the lookout for, and maybe maybe that's some individual sectors or some names in particular manifest that kind of resistance and show that rotation more, and so we're going to be on the lookout for that in stock waves. But we are looking for that to potentially, more of those charts that kind of argue with, further upside only into May or into June, July, and then setting up as the potential to fade from there, setting up for that rotation. So now let's take a look at one of the other index charts. Let's look at the Dow. And the Dow, we have a very similar structure, but the Dow does fit Avi's more bullish structure, I think, a lot better. Where the move up into September here was just the intermediate, was the fifth of intermediate degree wave 1, and this was a consolidation as the intermediate degree wave 2. And off of that, we have the potential for the heart of that move, either a little bit more conservative, counting the smaller minor degree wave 1 here, but the green count is what matches Avi's count the most in the S&P on the Dow. And that allows us to be really in the heart of the green fib structure, but we really should hold a high level of consolidation here in the high 33,300s and start to continue to fill out even more so as in the heart of this move. But that has our intermediate, or our 100% extension of the intermediate, the parentheses wave 3, is at 42,000. So maybe, this gray is a lot more conservative. I have that only at the 764. Really should, normal Fibonacci pinball should take this 3 up to the 100% extension off of this wave 2 down here. And so the green path, helps get us there. But even though that still has us very, very, very much in the absolute smack dab in the heart of that move, we can continue to get a series of increasingly larger fourth wave consolidations, where this might be a microwave 4 of the green 3, then we get the green 4, then we get the fifth of the parentheses green 3, then we get the parentheses 4, then we get the fifth of the circle green 3, then we get the circle green 4, and all of those consolidations could really wreak havoc on some shorter term volatile leveraged positions and frustrate a lot of people, because you'd be talking about getting a nice rally that looks like a breakout, and people trade it as though it's a breakout, but it's really just topping in the next 3 and getting a consolidation. Then pushing up and you get another breakout move, and it looks like it's going to keep going, but you get 5 waves up as that 5th, and you get another 4th wave consolidation, maybe a series of continuing to get higher highs and higher lows before you get, you know, a sizable move again that kind of has a multi-month staying power. And all of these could be very nice rallies as well. But just want you guys to be aware that you know, I see the most potential for the Dow to align with a more bullish interpretation of the S&P. But we do have to be careful that there is a lot of room for some churning. And so, you know, if you're trying to just buy and hold, you know, this period of time could be very, very frustrating. You know, if you're trying to use the leveraged ETFs or just the ETFs in general for holding on to a longer term position in the Dow, you know, there's a lot of you know, back and forth movement that, you know, could be excellent for scalping, but very frustrating for somebody who's just trying to hold this longer term. So wanted to make you guys aware of that. I think the Nasdaq fits much more in line with with the way that we're counting the S&P as being further ahead. There is a potential that this is filling out as a leading diagonal for wave 1 of a much more extended 5th. But I think this is looking much more in line as the 5th wave of the intermediate degree wave 3. So that has the Nasdaq much further ahead of the S&P. And so after this move completes, you know, it's going to have room for a bigger consolidation. It may not need to come as deep. You know, something like this could move out further in time as opposed to coming as a deeper consolidation. But I think we do need to be on the lookout for that. There was some risk here of this being an ABC up for a B wave and a wider flat. But I think holding a corrective consolidation off of this high and not immediately starting a move down makes that a much, much lower risk. So we're going to fade that out. And if it did decide to drop at this point, it would probably hold, if not a higher low, than just nominally under this. But I don't see any kind of start to that alternate 4. Looking at the 4th wave inside this 3 of the 5th to hold the 13,700 region. Maybe it needs a wider flat closer to 13,500. But looking pretty good as the start of this 5th wave off of the 13,700 lows here. And now we'll look at the Russell. And yeah, John, we'll take a look at the RSP, because that's one of the things that Garrett and I have been looking at for quite a while as being a good indicator. Actually, you know, I'm going to pull up the IWM, because my IWM chart is cleaner than the Russell at the moment. Not that much cleaner. All right, so what Garrett has talked about with you guys is the potential that since we did hit a 100% extension on a nominally higher high, we got a little bit past the 100% extension of the intermediate degree parentheses wave 3, is that you know, we're counting, we have a clear 5 waves up into the June high for wave 1, and I'm counting this as an expanded running flat for the wave 2, and we can count this as 5 waves up to the 100% extension of the parentheses wave 3, or 1, 2, and then 5 up as the 3rd here. And so if that's the case, then this could be a B wave bounce that we're getting off of the March 25th low, setting up for a wider flat in the purple wave 4. So that's the more immediate bearish concern. But in the shorter term, it does not quite look, and we'll look at the micro count on the Russell in just a minute, but it does not quite look like this B wave is complete. So it does look like even if this is the B wave of the fourth, we have the Nasdaq, which is kind of pushing past and making that a less of a threat. And we have the Russell kind of gaining a little bit more strength off of this more recent low as the deeper B wave, if this is a B of the third in a diagonal. And even if it is an A, B, C structure for this B wave, that should still try to get a little bit higher into the 233 region. But our preferred count is not that this was the top of the minor degree wave 3 of parentheses wave 3 here in purple, but that we're filling out an ending diagonal up towards the 256.24 level for the minor degree 3 of this parentheses wave 3. And that's what we're going to zoom in and talk about on the Russell chart right now. So get rid of that so we have a little bit more clarity here. Probably should not have made that purple. We'll make this pink. Okay, so we either have, if we're still working on the fifth of the third here, we have two options, but we're following the blue ending diagonal count as the primary count of those two options. One is that the earlier March low was all of that green circle wave 4, and we have the 1-2 start into the near double bottom, but it held a slightly higher low on March 25th. And from there, we're working on the ABC structure for the third of our blue ending diagonal. The alternative is that this was an expanded running flat where it made a higher B wave and then a higher low for the C in this alt wave 4. But I really don't think that's the best way of counting it. And if that is the case, though, it's possible that this is an A, B, and a C wave up for a new wave 1 of an ending diagonal, and it stretches this whole thing out for much further in time. But this 26-25 region is our ideal target for the 3 of our parentheses wave 3 off of these lows. And so I think as long as we're going to be holding the 2220 region, maybe 2215, from here, I think we're good to continue higher in the blue count. The only variant, I'm going to zoom in one more time, is either we can have a micro 1-2 and then a 1-2 start to the C of 3, targeting the 2500 region in the Russell, or this can be an ABC up for a micro wave 1, and we can consolidate a little bit more back towards the 2220 region maybe as the micro wave 2, and then get a 3, 4, and a 5 up for that C of 3. If this is the purple B wave that we have to be on the lookout for, then this might hold here as a fourth, push up to maybe the 2350 region. And so that's the main resistance that we're looking for in that alternate count, where this is the 3, this is an A, B, and a proportionate C wave up as a flat for the B wave. And then if we turn down sharply from here, then there's a significant risk that we're heading down to the low 2000 region again as that purple wave 4. So that's the risk that we're on the lookout with a lot of the small caps. And now let's take a look at the equal weight version of the S&P. And then we'll go look at our metals and oil and all that good stuff. All right, so as we talked about, same circle primary degree wave 5 started back here in March 2020 low. The RSP very clearly looks like 5 waves up into the June high. an ABC consolidation as the intermediate degree wave 2 into the June low. And then from there, we have a minor degree 1-2 start to the intermediate degree wave 3, a 138.2% extension of 187, a 1618 extension of 209.50 roughly, and are filling out more of our minor degree wave 3, which our 100% minimum target is the 156 region. But the subwaves that we're looking at right now off of the earlier March low from this year line up with extension closer towards the 1236, but maybe not quite all the way up to that 174.60 region. So we're looking at our target here for this third in between the 156 and the 174.6 region. And depending on how close we get to this 174.6, might push our intermediate 3 up closer to the 209.50 region. So that part will kind of play by ear. But what I wanted to focus on more so is that, you know, similar to the S&P and other things that we've looked at off of the March low, we have a 1-2 start. But this looks like the 1-2 start proportionate, you know, the subwaves that are filling out look really good to proportionally fit in line with this 5 of wave 3, targeting past the 156 region, but maybe not much past 161 to 163. And so inside that count, we are in a micro 5th wave of the third of that move. So the third of that circle wave 5 should be targeting the 156 level. The 123.6 is at 151.35, and so that's our ideal target for this wave 3. And our current trajectory inside this micro degree wave 5 off of the April 20th low has us pointing, as long as we can hold support, ideally holding the 148 level now, popping towards 150, then back down towards the 148 level, and then up towards 151 and change to fill that out. And then again, holding the 48 to 47s as the 4th, and then our 5th wave up towards 156 would be really ideal to finish out that move. So if you want to give yourself more micro, we should really hold the 148 region. But at this point, key support is in the 145s for that to continue as an impulse. All right, let's move on to, let's briefly take a look at oil. I'm going to change this to an alternate count here because this is actually acting a little bit more bullish, off as though it's possibly the start to wave 1 of a 5th wave off of this low. So this would be filling out as a leading diagonal based off of a very, very shallow 4th wave here, holding, I mean, we did get past the 200%, or almost the 200%, and then came back down close to the 1618. So, I mean, it's not beyond reason to consider that this was all of the intermediate degree wave 4 in oil. And this is acting pretty nicely like a leading diagonal here. So this would be the 3rd, the 4th, and instead of it being the 5th wave of an ending diagonal for the C here was kind of an awkward 3 and 4, you have pretty normal proportions inside this move as a leading diagonal here for wave 1. So this can be an A. We need a B wave to hold the 62s and then get a C wave up in this green 5th towards 68, and then probably want to see this hold around 61, 62 again for the wave 2, and possibly even a more shallow consolidation than that. But there is some risk if this is a B wave here. There is even some risk that this is all of the B wave trying to complete if it's the same count for that purple A. But I think what I'm going to do, yeah, let's go ahead and do that. We'll make that more of an alt. This is just a very, very shallow fourth wave. But it does certainly look like we are getting a more bullish start to a fifth. And maybe this was just an alternate 3 of this 3, and this is going to be extension of this 3 instead of already the fifth wave. But I think that's what we really need to consider on oil in terms of the bullish counts that Garrett and I see in stock waves in general. So, I mean, I could count this as an ending diagonal extension. So we'd certainly want to hedge the potential for this wave 2 for it to not hold. But I think we have to start giving the more immediately bullish potential the benefit of the doubt there, particularly with the energy charts, the way they've been looking the past few days. All right, let's move on to, we'll take a quick look at natural gas, but I don't think I have anything really reliable here. This probably makes the most sense to me, but it really, I kind of hate the natural gas chart. This seems way too wide for a B wave. I would probably rather count this as this is the wave 1, and this is a larger ABC up for that wave 1. And then this is a wider flat as a running flat. So this is the A, B, and a very muted C wave for a running flat, because it's running because it didn't actually make a lower low. And then we can target. So it's still pretty bullish. I have a very, very hard time counting this, looking for, counting this as anything other than an ABC move up here. So let's get rid of the fibs there. I don't know what that is from. Oh, maybe that is a C wave. We could leave that. All right, so if this is starting a third of our diagonal here, the third wave should be an ABC move because the wave 1 counts best as an ABC move. The normal targets for the A wave of a third in a diagonal are going to be the 618 or the 764 extensions of that third. If we stop at the 618 and hold a B wave, then the 100% extension for the third is the primary target. If we extend to the 764 and then hold a B wave, then the 123.6 becomes the optimum target for the third wave of that diagonal. And then the fifth wave can extend on closer up towards the 1618. But I do think you have to be weary of long-term trending expectations for some commodity charts. I think a lot of times they set up and look like they are setting up to trend, but this 4 region might be some pretty hefty resistance in terms of prior, or 5 region in terms of prior significant tops. So, and that's, the 764 is right there at 465. So I would be on the lookout for that to get knocked down pretty hard. The other thing that you have to be aware of is that since you're dealing with a diagonal, most likely, that the A wave can also be itself an ABC move up. And that this A wave could also be an A, and maybe it needs a B wave and then a C wave up. So just be very careful shorter term trading on the on the natural gas charts. Possible that this is starting in a third of an impulse though, and this A wave could be in a 5-wave impulse. So this is 1, 2, and you have the 1, 2 start, and you're in the third, so you get a 3, 4, and 5 waves up for that A wave. It is even possible that this A wave is 5 waves up instead of the ABC, but I don't think you have a clean enough structure off of that low to consider that 5 waves up. Curtis, we cover XLE pretty extensively in stock waves, so feel free to go take a look there. Right now, I'm going to try and change screens without messing everything up to talk about gold next. All right, let's zoom out here on gold. Zoom out one more time. There we go. All right, so gold, and we have our 5-wave move up for a primary degree wave 1 off of the 2015 low, wave 2, December 2016, and then off of that, it looks like we have our primary wave 3 completed at the 223.6% extension exactly, and are filling out our primary degree wave 4, which might have bottomed, and that's what we're going to zoom in and look at. But then we're looking for a primary wave 5 that should at least target 1 fib higher than the primary wave 3. So that would take it to about 2150, which is the 2382 extension, and also a 100% extension of 5 relative to the size of wave 1. But pushing up further to the 2618, or maybe even the 276.4 of the yellow fibs, which has perfect confluence also, depending whether or not we get one more low or not, has pretty perfect confluence as also the 1236 or the 1382 extension of primary wave 5 relative to the size of primary wave 1. So that's what this 5 versus 1 fibs are laid over the top of our yellow fibs. So that should be a 5-wave move up, regardless of whether it is going to be an ending diagonal or an impulse. We'll give it the benefit of the doubt that it will be an impulse unless it starts to show that it's an ending diagonal. But now we're going to look at the structure that we possibly have in terms of a potential bottom to our primary wave 4, or needing one more low. So in order to count the primary wave 4 as complete, and this is going to be a good segue. Harry left already. I was going to use this as a segue into talking about WXYs versus ABCs. So if we're going to count the primary wave 4 as bottomed, we either have to rely on counting this as a WXY or counting this as either of these as a very truncated 4th and 5th wave bottom to the C wave. So if I can frame this a little bit better, there we go. You can see the top of our primary wave 3. We have an initial move down as an A wave, a B wave bounce, and we need to have 5 waves down for a C wave. If you have a very high probability bottom and you get a confirmation of a low with 5 waves up, or sometimes if you have a very clear ABC move that satisfied your correction and then you had kind of an extra drop down, sometimes that's where you would call something a WXY. But here, or when you just clearly move up and get something that is more than the 4th wave that you would expect for a C, then you have to go and say, all right, this was either a truncated bottom somehow to the C wave, or it was an ABC move for the Y wave in a WXY pattern. So the thing with a WXY is C waves should be 5-wave moves. So if you have something in the C wave position, but it clearly doesn't have 5 waves, but it's clearly bottoming, that's where you use the WXY structure, where you have an ABC for that instead of a C wave that's 5 waves down, you have an ABC move, and so that counts as a Y. So if, without getting into either of those scenarios, off of the actual low that we have in earlier March, we do have what can count as only an A, B, C move up into expected resistance for a 4th wave. So as long as we stay under this top that we made, just under 1800, there is the risk in gold of trying to target one more low, possibly nominally under the 1650 region. It is not necessarily needed, and that move itself could potentially truncate. I would be much more comfortable calling a truncated bottom of something that maybe only got to the 1670s but didn't actually make a lower low, calling that the 5th of this yellow wave C of the primary wave 3rd, and then starting a new impulsive move for our wave 1 from there. But we do have potential structure working off of either of these lows, trying to hold a corrective consolidation and get another high, which would look a lot like more than this wave 4 off of either of those lows. And that's what we're going to look at on this tab right now. Either counting I have this over here as a truncated low, but I think it's very hard to count an impulse off of this low. So I think what makes more sense is either counting the Y wave bottomed or squeezing in a small 4-5 and calling this the green wave 4 either way. So I think what we're going to look at is if this is going to be more than that 4th wave, then both of those are going to come off of, either count is coming off of the earlier March low. And there we have an ABC move up for wave 1, an ABC move up for wave 3, are trying to hold a 4th wave, which this might be all of the 4, but it's probably only the A wave of a wider 4th. And then we would need a 5th wave up towards the low 1820 to 1840 region, and that would give us a leading diagonal off of the low for either the wave 1 of a larger wave 1 or just the parentheses wave 1 in the start of that larger circle wave 5 in gold. There's a lot of the individual names in GDX that we're looking at that fit structure like this off of the low. And so I suppose we can hop over and take a look at the GDX chart now too. I'm going to jump to this tab first. So different than gold, the same bottom here from 2016 was from early 2016. Counts better at this point as an ABC move up for primary wave 1. And then we have this very, very wide and deep consolidation. It's actually not so deep. It's just a little bit dipped under the 618. But we did break under the prior September 2018 low. So in a lot of individual charts in GDX did, which that counted better as the primary wave 2 here and a wave 1 and a wave 2 that we were looking for, but it didn't hold support for that wave 2 in the 20s. And so the dip down here made us count a more complex structure for an alternate primary wave 2, and it made the larger pattern look much more like a diagonal. That, coupled with the fact that we got a move up to just past the 100% extension, but then faded deeper than we really should have 4th wave in that primary wave 3. So a lot of our charts in the minors look better counted as an A and a B wave inside this primary wave 3 here. So a lot of those are working on the start of their wave one of that C wave, heading up off of the more recent February or March lows. And now we're going to zoom in on the GDX off of that low so far, which is looking like a move up for the wave one, the wave two, an ABC structure here for the third. Currently, possibly this was all of the fourth wave, but we can get a wider and slightly deeper flat consolidation here for the fourth, and then getting a fifth wave up for that wave one towards the 38 region. The slightly more bullish alternative, I think technically this green count is still in an impulse for the third wave is valid. But I think more likely, if it is a little bit more bullish than just this, this is an A and a B and a larger third of the same diagonal. So instead of this being the top of 3, even though it hit the 123.6, we're going to get a C wave up closer to the 38 region, and then another 4 or 5 from there. But the 34s should ideally hold as support for another move up towards the 38 region. Right now, we're looking for some confirmation that either this was all of 4 or that this is going to hold as a B wave and then come down as a wider flat towards the 34 level as support there for that fourth wave. And then silver is a little bit more messy, but we'll go ahead and take a look at that also. I think the silver chart, zoom out here, it's very hard to count this as all of a fifth wave in silver. But this is stretching out, is much more of a stretched out ending diagonal than we would normally expect for a fifth wave. So the alternative that I have is, especially if this is going to hold as resistance in the 2670 region on silver, is if we do get another drop, then I'm going to count this as just an A wave. Instead of getting 5 waves up, this can be an A. This can be a wide corrective consolidation for a B wave. And then we can get a pretty proportionate C wave up that might take silver up towards the 50s. It might not be as bullish long term, but that would kind of fit a little bit more with the potential that we see in gold. The smaller degree, silver can be fitting also very nicely with gold, holding as a fourth wave in GDX, holding as the fourth wave in a diagonal off of the March low. But that is as a diagonal as the A wave inside the A wave of this larger third of our very, very incredibly large ending diagonal structure for a fifth wave that just really doesn't quite look right. But at the same time, when we zoom out here, it's hard to count this as a completed fifth wave, even though it did nominally get higher than the third. But even if we were to count that as a completed fifth wave, it's very hard to rely on this as all of a larger wave 2. But that would be the absolute most bullish that I could get on silver, would be to call this a wave 1 and to call this a wave 2. But even if you're going to assume this, you're still working on less clear potential diagonal structure to start the initial move off of that low. So you can approach the smaller degrees much the same way. You can just give more benefit of the doubt to the upside starting to run away in trading off of support if you're going to look at this as being even more bullish. All right, we do have time. Let's jump over and take a look at bonds next. In treasuries, let me zoom, go to one of my larger tabs that has the bigger view that I'm tracking. So long term in the 30-year US Treasury bonds, I'm counting a very, very large diagonal off of the October 1981 lows, or September 1981, somewhere there. It's a 2-week chart. So yeah, September 1981. So we have an ABC move up for wave 1. We have a very, very long A, B, and C wave move up for the 3rd. We have an expanded running flat for the 4th wave. Maybe you could count this as the 4th wave, and this is still the A and the B, though, and are looking for the potential start soon to the primary degree C wave up in the 5th of that very, very long-term structure in those Treasury bonds. Thank you, Linda. I'll take that under advisement. The pink kind of blends in for me on my screens a little bit more with white. So the purple is kind of fits with my mental color coding as well. All right, so what we're going to zoom in now on the primary analysis tab is the potential count for this B wave here to be finding support. We can see that we are in a normal Fibonacci support region, just under the 618, but still holding a 764. But we do have room to this lower trend line that has behaved very nicely, holding that long-term trend channel. So once we're going to look at the potential for this being a 4th wave bounce inside the C of that B wave, setting up for one more low in that primary degree B wave for treasuries. So what I posted in the markets section under bonds earlier is it's not clear to me if this was the top of the A wave and this is already filling out and nearly complete with the B wave, or if this was the top of the A wave at a nominal higher high and we need maybe more of a bounce and more of a corrective consolidation for the B wave here. Maybe this is completing all of a B wave, but I doubt it. Or if this is 1, 2, 3, 4, and we need one more push up in the A wave and then get a B wave consolidation before we try and head up in the C. This count doesn't quite look like all of the A wave. At least in the 30-year Treasury itself. We're going to look at TLT real quick, but if the more bullish I would get would be something like this. And if we zoom in here, we can squeeze in 5 waves up at a no, I guess I counted there. We can squeeze in 5 waves up, even though it pretty much got a truncated top. This is less of a truncated top. But I don't think this is clearly enough for the B wave yet. It's not even a 382 retrace. So my assumption would be, even if we're going to count this as all of the A and we're working on the B wave already, which could be more immediately bullish or sooner bullish for a C wave up targeting the 163 region in the 30-year, my assumption would be that this is going to get a little bit more of a bounce as a B wave and then come down closer to the 156 to 155 region first as that B wave consolidation. When we look at TLT, and keep in mind TLT is kind of is stuck in the middle between the 10-year and the 30-year treasuries, but it does have a different subset of investors that trade TLT. So while the people that run TLT try to have TLT a little bit closer to a 20-year plus duration, so its mix of the 10 and the 30-year skews a little bit more towards the 30-year. We also do have to consider that there are different investors that trade TLT that might, sometimes the tail might wag the dog, so to speak. So in looking at the TLT, it looks much more like this is maybe 5 waves up as the A, B, and 5 waves up for a C wave as all of A here, and trying to fill out a flat consolidation to complete all of the B wave. So TLT might actually leans a little bit more towards the more immediate bullish potential to get a C wave up, targeting the 146s to 150 region as that wave 4. And certainly, we can squeeze in all of the B wave in both of those charts or in all of those charts and be on the lookout for something to turn into being more than just a 4th wave. All right, I think that pretty much does it for our time, and I think we got through covering most everything. Maybe we'll take a quick look at the dollar because I haven't looked at the dollar in a while myself. I know we sometimes do that here. All right, well, we are at a potential last kind of level of support for the B wave in a wider flat B wave. I'm counting this move down as 5 waves down in the dollar as an A wave. We do have a corrective bounce, which could have been all of that B wave, starting a measured move down, which is pretty bearish on the dollar. This is not a clear impulsive start, but it looks more bearish than a clear A, B, C corrective consolidation holding support in the 90 region for this B wave. What I would probably expect is maybe this is 5 waves down of this measured move starting, or working on 5 waves down. So maybe we break under the 90 support, hold somewhere in the 89s. I would expect a corrective bounce back up towards the 91s, maybe 92 region, and then the dollar could potentially tank in the third of this measured move. But there is some potential support here in the 90 level. I would be looking only for a move up towards the 94.50 region maybe as this wider flat for the B wave, and then just moving our red Pirate Ninja over to the side if it got that. But I would not be actively trading the dollar to the long side or worried about potential correlation effects unless I saw very, very clear 5 waves up and 3 waves down as the possible start to this C wave. All right, we'll go ahead and stop there, and I'll get this uploaded for you guys, and I'll see you next time.